Assalamualaikum and good day. We are from Group 4 and today we will be presenting our group project for the course MAF653 Financial Market, and our topic focuses on Malaysia as a global pioneer and powerhouse in the Sukuk market. For this presentation, we will begin with question 1. This question is divided in two parts. In part A, we will explain the roles of Bank Negara Malaysia and the Securities Commission Malaysia, compare their functions and discuss how their coordination strengthen the Sukuk market. Then, in part B, we will discuss the government's role as a sovereign Sukuk issuer and explain why government leadership was more important than private sector initiatives. For part A of question 1, I will discuss the roles of Bank Negara Malaysia and the Securities Commission Malaysia in developing Malaysia's Sukuk market and explain how their coordination strengthen the overall ecosystem. So first, Bank Negara Malaysia or BNM plays a central role as the country's central bank. Its main responsibility is to ensure stability within the Islamic banking and monetary system. BNM regulates Islamic banks and takaful operators, sets Sharia standards and provides Sharia-compliant liquidity instruments. These measures ensure that Sukuk are effectively integrated into the banking system and can be used for liquidity management and monetary operations, especially by Islamic financial institutions. In contrast, the Securities Commission Malaysia or SC focuses on the regulation and development of the Islamic capital market. It oversees Sukuk issuance and trading, introduces clear and comprehensive Sukuk guidelines, and ensures transparency, disclosure, and investors' protection. The SC also plays a key role in encouraging market growth and innovation, including the intro of sustainability and responsible investment Sukuk, which help attract both Islamics and conventional investors. Although BNM and SC have different regulatory mandates, they share common objectives. Both institutions aim to ensure Sharia compliance, maintain market integrity, and strengthen investor confidence. To achieve this, each institution operates its own Sharia Advisory Council, which provides authoritative rulings and help reduce Sharia uncertainty and legal risk in the Sukuk market. And most importantly, effective coordination between BNM and SC creates a consistent and well-structured regulatory environment. This coordination ensures seamless integration between the Islamic banking sector and the capital market, reduce regulatory gaps and arbitrage, and enhance overall market stability. As a result, Malaysia has been able to build a robust and globally competitive Sukuk market, supported by strong regulation and high investor confidence. So next, we will continue with the part B.
My name is Shara Auni. Would like to present the next part of question 1. This slide explains why the Malaysian government is the single most important catalyst in the growth of the Sukuk market. The government actively participated as a sovereign Sukuk issuer, which helps establish a risk-free Islamic benchmark through regular sovereign Sukuk issuance. As shown in the chart, government Sukuk from the benchmark rate curve, while corporate Sukuk are priced above it based on risk. This benchmark reduces market uncertainty by providing clear pricing references, especially during the early development stage when private Sukuk lack investor familiarity. Government Sukuk also demonstrated strong Sharia credibility, legal clarity, and government backing, making them low-risk investments. As a result, investor confidence and market liquidity increased, encouraging greater participation from both domestic and international investors. This slide explains why government involvement was more important than private initiative in developing Malaysia's Sukuk market. At the early stage, the private sector could not drive market growth on its own. Private issuers face high risk, low investor confidence, and unclear pricing, so Sukuk remained unattractive. Without government leadership, Sukuk would have stayed a small and illiquid product. As shown in the chart, the government took the lead by issuing sovereign Sukuk, absorbing earlier risk and setting standards. This encouraged private participation rather than replacing it. Over time, the private sector reacted, leading to sustainable growth in the Sukuk market.
Hi, my name is Noisa Batrisha. I will explain about the evolution of Sukuk structures in Malaysia. The development of Sukuk in Malaysia shows how the country has steadily grown and innovated in Islamic finance while staying within Sharia principle. Over the past 30 years, Malaysia's Sukuk market has evolved from simple structures to more advanced and sustainable instruments. Malaysia's Sukuk journey began in 1990 with the first corporate Sukuk issued by Shell MDS Sendirian Berhad worth RM125 million using the Bai Bitaman Ajil BBA structure. This structure involves selling assets at a deferred price and allow investors to earn returns without charging interest, which is riba. This early issuance proved that Islamic financial products could work well in modern capital market. In the early 1990s, Ijarah Sukuk, which is based on leasing, became popular. Investors earn returns from rental payment instead of interest, making it simple and predictable. These Sukuk were widely used by the government and companies to fund infrastructure and development projects, helping to build confidence among investors. A major milestone was reached in 2002 when Malaysia issued the world's first global sovereign Sukuk worth $600 million. This attracted international investors and positioned Malaysia as a leader in the global Sukuk market. As the market grew in the mid-2000s, Malaysia introduced partnership-based sukuk such as Mudharabah and Musyarakah. This structure focused on profit sharing and risk sharing, allowing investors to participate directly in business and infrastructure projects and strengthening the link between sukuk and real economy activities. In the 2010, Malaysia further innovated by introducing hybrid sukuk, including exchangeable and convertible sukuk. This instrument allows investors to convert sukuk into share, offering more flexibility and attracting a wider range of investors while remaining Sharia compliant. Between 2017 and 2020, Malaysia took a major step forward with green and sustainable sukuk, which is Sri Sukuk. The country issued the world's first green sukuk in 2017 and a USD 1.3 billion green sukuk in 2020 to fund projects such as renewable energy, water management and energy efficient buildings. Unlike traditional sukuk, green sukuk connect investor return not only to asset performance but also to environmental, social and governance ESG goals while remaining fully Sharia compliant. The innovation position Malaysia as a leader in sustainable Islamic finance, especially within ASEAN. By 2021, Malaysia accounted for over 56% of ASEAN's Sri Sukuk issuance, attracting a wider range of investors, including foreign and non-Muslim investors. Malaysia's success with green sukuk also encouraged other countries such as Indonesia, the UAE and Saudi Arabia to develop similar instruments. Strong support from the Security Commission Malaysia and Bank Negara Malaysia was key to this achievement. Clear Sharia guidance, tax incentive and a well-developed market framework help ensure the success of green and Sri Sukuk, strengthening Malaysia's reputation as a global benchmark for innovative sukuk issuance.
Assalamualaikum, I'm Busaina Amira and I will explain about the deconstruction of the sukuk structure. First, this sukuk structure is based on Sharia compliance agreements combining istisna and izarah. Under istisna, sukuk proceeds are used to finance the deconstruction of green assets such as solar plants. Once construction is completed, ijarah come into effect, where the project operator leases the assets. Importantly, investor return come from lease rental, not interest. Next, the Special Purpose Vehicle or SPV plays a key role. The SPV issues the sukuk on the behalf of the project company and hold beneficial ownership of the asset. It also acts as a bankruptcy remote entity, protecting investor and oversees all key contracts, including construction, leasing, and payment distribution. Finally, in terms of cash flow and risk, sukuk holders own undivided beneficial interest in the assets and bear asset-related risk in line with Sharia principles. Rental payments are made to the SPV and then distributed periodically as profit to investor, while operational risks are managed by the issuer through service agreements. Then, the impact on broadening the appeal of sukuk to both conventional and Islamic investors. Green and SRI sukuk play an important role in attracting conventional ESG-focused investors. These sukuk support sustainability goals with proceeds used for social and renewable energy projects. While they are similar to green bonds, sukuk also include ethical and Sharia compliant features, making them attractive to non-Muslim institutional investors as well. Today, sukuk are widely accepted as competitive alternative to conventional bonds. They offer comparable risk-return profile, transparent structure, and are supported by a strong regulatory framework which increase investor confidence. In addition, sukuk helps strengthen Malaysia's global position by acting as a bridge between Islamic finance and the international ESG market. This positions Malaysia as a leader in sustainable and green finance and reinforces its role as a global hub for Islamic finance. Finally, the broader investor base, both Islamic and conventional, improve market liquidity and diversity. Higher demand enhance secondary market liquidity, leading to better pricing efficiency and deeper capital markets.
Today, I outline a 10-year strategy roadmap to strengthen regulatory and Sharia harmonization while deepening the ESG and sustainable finance nexus in the global sukuk market with Malaysia at its course. From year 1 to 3, foundation and standardization. First, Malaysia will lead the development of a standardized global sukuk master agreement with institutions such as the IFSB. For the impact, this reduces legal and Sharia uncertainty, lowers cross-border transaction costs, and strengthens global investor confidence. Second, SRI Sukuk will be mandated as the default channel for government and quasi-government infrastructure and green projects. This creates a credible pipeline of ESG assets and anchors Malaysia as a global pricing and structuring benchmark for sustainable sukuk. Next, for year 4 to 6, adoption and innovation. With strong foundation in place, the second phase focuses on adoption, scale, and innovation. Malaysia will introduce a mutual recognition framework for Sharia advisory councils across key international markets. This framework will significantly reduce duplication of Sharia reviews, enable faster Sukuk issuance, enhance secondary market liquidity, and broaden participation from international investors. In parallel, targeted tax incentive will be introduced for private green and SRI Sukuk, aligned with selected United Nations Sustainable Development Goals. The impact is clear. Private capital is mobilized at scale, the issuer base is diversified beyond sovereign and public entities, and ESG-focused project financing is accelerated across sectors such as renewable energy, transportation, healthcare, and social infrastructure.
For years 7 to 10, leadership and global expansion. Malaysia will establish a global Islamic capital market dispute resolution center. The impact is enhanced legal certainty, stronger investor trust, and Malaysia's positioning as the global governance hub for Islamic finance. Finally, Malaysia will pioneer blue Sukuk and social impact Sukuk while supporting other OIC countries. The impact is global leadership in high impact innovation and increased share of sustainable Sukuk issuance. So, in conclusion, this phase strategy enables Malaysia not just to lead in Sukuk issuance, but to shape the future of global Islamic and sustainable finance.